So welcome to the India Market Review for 28 November 2014, our weekly Friday evening exercise on looking at what's happened in the Indian markets and looking at all the factors that have happened across the world and locally that have impacted the markets, and also then taking a view on what could happen in the coming week, and maybe if we really find some good high potential profit opportunities, then we discuss them in detail, right? So for those of you who are watching the recording, you know, have the background. So let's jump in, keep it crisp. So some major events of this week so far, and if I miss anything or if there's something you feel is important, just let me know and then we'll discuss it. So first and most important is the crude oil price is now below, or actually almost at $70 per barrel. This is big news all over the world. I hope that's correct spelling. All right. What's the correct spelling of barrel? Sorry, somebody tell me. Thanks. Anyhow, so this is going to really upset a lot of people, make a lot of people happy. So India, of course, is very happy with this. OPEC decided to keep the crude production flat, right? 30 million per day, right? So that instantly brought prices down by about 5 to 8% in the international markets. And one of the beneficiaries today was, a company like BPCL, HPCL in India, which just shot up right at the opening. This has grave implications. So for the Indian economy, the fiscal deficit is something that will now be much easier to manage. The subsidies are definitely gone, of course, after the decontrol of diesel, and what you have now is the positive effect on possibly lower inflation for India in the weeks and months to come. So definitely good news for India, bad news for all the oil producing countries, Middle East particularly, and Russia. So the Russian ruble, by the way, fell to its life low after the OPEC decision, and how this affects the budgets of the Middle East countries is open to a huge big question. Most of the Middle East countries peg their national budgets on the incomes of oil at anything between $95, $97 per barrel to $130 per barrel. That's the calculation that they do. They use that as for their internal calculation, and they say we are producing so many barrels per day, so we're going to make so much in this year. And now that's completely gone for a toss. There is absolutely no country in the Middle East that is now selling oil at the rate it should in order to support its budgetary expense. So we will really have to see and see whether there are any geopolitical outcomes on this. Russia will definitely feel the pinch very, very badly, and this has already affected the Russian economy. The other aspect of this is, of course, the impact on oil sands and shale oil across the world. Those are more or less now virtually non-profitable. There are already reports 2 weeks, 3 weeks back of some of these wells or shale oil finds have been already shut down, and definitely some more will shut down now. Anwar is saying that $70 is the bottom for crude oil right now. Well, unfortunately, I don't have an international crude oil chart right now. But one thing that if we have learned in markets technicals wise is that let the bottom form, and then maybe the Middle East countries can heave a sigh of relief. Here in India, of course, we'd like it to go down as low as it can. So if we can get it at $30, half the price it is now, then wonderful. It'll be we're already paying about 10-15 rupees less per liter on petrol, and it makes me so happy since I have a petrol car. The diesel itself has come down by 5-6 rupees. So for India, it's a different story, and the Middle East countries, it's a different story, right? Something about the GCC. Okay. So Anwar is actually on the webinar today after a very long time. He's actually based out of Doha. So it's really nice to have him. And he's adding on the chat box that for the GCC, which is the Gulf Cooperation Council, so that's mostly all the well-developed Middle East countries, as a group, $70 per barrel is their worst case scenario. I think, if I understood it right, what Anwar is trying to say. And if oil goes to below 70, right? So he's confirmed that if that's their worst case scenario, and if oil goes to below 70, then it's a panic situation for the Middle East countries. So this is really interesting, and a lot of the things that are being proposed in the Middle East might just now, not happen. And this is going to have real consequences in terms of employment, in terms of projects, in terms of political stability, in terms of the rise of maybe fundamental Islam and things like that. So there is trouble ahead. You can be sure about that in the Middle East. It could impact the Arab-Israeli conflict. There is going to be problems in Russia, but the Americans are going to be happy. We importers in India and any other country that imports is going to be really happy. So unless crude oil really goes back up quickly, we are going to see a lot of things. And of course, all these things are in turn going to impact the market. So I definitely think very, very, very interesting times ahead for the world and definitely all the markets. So we'll definitely keep a track on this. All right. The next most important thing that we need to keep in mind is on December 2nd, RBI policy is going to be announced. Now, there was a poll done across India amongst the corporates, etc., and bankers and analysts who are expecting interest rates to come down only next year. Having said that, with this big fall in oil, if the view is different within the RBI, then interest rates could start falling faster than was anticipated. And next Tuesday, so at BIC we are having a live trading day on that day. Plus we're going to have an in-depth review on Monday evening to specifically look at banking stocks and interest-sensitive stocks. And of course, on 2nd December, at around 12 noon or exactly at 12 noon, Rajan will come on TV and make an announcement, and we're going to probably see some action. So I think in anticipation, as we will see in the review today, banks have already gone up, have shot up today actually, some of them, right? And whether there is something in the market that I am not aware of, if you are, please do share your insight as to whether the interest rates are going to come down, or is it that the market has already discounted this much lower price of crude oil and is now decided that interest rates coming down is just a question of when, not if, that the interest rates now have to come down because inflation will come down, the subsidy is gone, the Indian fiscal deficit will improve. All these things could really have an impact which the market is already factoring in and saying this is a matter of time, and the prices have already reacted to that. So just had a thought in this. So while the crude oil is down, while our fiscal deficit is getting better, and RBI policy and inflation is getting better, and RBI may decrease the interest rates, there is a fallout on this, which is directly going to be on the forex rate, right? So we are talking about the USD INR here. And it's quite possible that the rupee could strengthen in the coming few days and weeks. So if you are abroad and are looking at sending money into India, then maybe a good time to review whether you want to hold on to the foreign exchange or start sending it into India and get the 61 rupee. I don't know, maybe the rupee has already reacted today. I will need to check. All right, so interesting stuff in the works. And if there, by the way, then we get a positive sort of vicious cycle. Let's put that to positive, which is the rupee gets stronger, and then even if the crude oil does not go lower in terms of rupee price that we pay, it's less for us in the rupee terms. Our deficit becomes better, and it just things become better. Inflation falls and things like that. So we might be getting into a positive vicious cycle here, which could last for several weeks, maybe a few quarters. For all we know, of course, we'll have to see. And well, we'll just take it step by step. So I think a lot said, a lot happening, and with this we jump into the individual stocks. If anybody has anything to add or share any news or any information, please do that now. Anything? Of course, you can do it at any time during the session. But any macro or local events that I might have missed, which you think are relevant to the market, that will be great. Oh yeah. All right. So one thing I have to add is expiry, right? Futures and options expiry got over yesterday, last Thursday of the month, and I think all of you are now aware that the Nifty was up more than 100 points intraday, and the Nifty ended up 94 points up in the day. So last 3 days, 2 days, it was like sort of sideways at 8,500. So those of us who know about the option chain data would have seen that 8,500 ceiling. And once that expiry went, just in the morning, we just opened 70, 80 points up, and boom, boom, it's just been, sort of one way up, nice gap up sort of opening, and I think we probably see some gaps in a lot of charts. So FNO expiry over, upside is building up again, and maybe this is going to be another nice month, December, and it's going to be perhaps bullish. Adding to that is the post that you may have seen that was sent out by Sridhar today late evening on the Santa rally on, I think, businessinsider.com, where they've shown some statistics that December tends to be a Santa month in terms of not just gifts and Christmas, but there are rallies that do happen. And well, December is just around the corner, and if that's true, and if that falls back into India also, the impact, then we could definitely be much higher, or at least somewhat higher from even the current levels that we are seeing. Okay, so those are the 4 main points, and to just quickly jump in, let's look at the NSE itself. What is the, so yeah, so that's the Nifty chart, right? So we've been bullish on it for the last 2 weeks, 3 weeks almost. It's just been going up, up, up. So the whole of November has been a pretty good month. Just to put things in perspective, October, so November there was, September there was a small correction. October it really jumped up. November was more or less a consolidation month, and then late November we have, or the first 2 weeks of November, consolidation month. In the last 2 weeks of November, getting into December, we've broken out again. So we are now there, 8588.25. And in terms of the technical stuff, nothing great in the volume today, but there's no weakness really in the indicators. This is a very short-term stochastic, so we can ignore that. RSI is showing quite a good amount of strength, and MACD is well in its overbought zone. So maybe the upside is not going to be very, very aggressive, but there's one thing that one should very, very be clear about: absolutely no shorts. All right, no shorting and no selling, unless this is as a general approach. Of course, individual stocks could definitely vary, and they might be very bearish, but even if they are bearish, do not short them. The market's bullish, stay on the primary trend, stay on the strong trend, stay on the market side. So you're going to look basically at further buying and accumulation. Okay, so now let's look at the, so how high up? With this, it's really difficult to say how high up it could go, but definitely it's we have a it's going to take time today, so I won't spend too much time on this. The point and figure analysis that was done by BIC members about a month back suggested that the Nifty could have a target of 8920. So 8,920. We are still about 300, 320 points, 350 points shy of that. So that's there's no timeline to it, but definitely at the rate we are going up, it could very well happen before this year is out. Right? So no signs of correction, no sign of shorting. Buy, 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 and let's look for what to buy. So looking at the Bank Nifty now, that's been the leading driver of the rally since October, as you can see. Just a one-way street, hardly any corrections. This is a daily chart, and we've mentioned this in mid-October when we did the IMR. So if you have access to the recording, please go review it, when we said buy it around 16,500, and it's 2,000 points up. And if you had gone long on the Bank Nifty in the futures, you would have made 50,000 rupees on that, which is almost, I think, more than 100% return on your margin money within, say about 6 weeks, 8 weeks even. That's fantastic return. So the macro theme was very much in place, and like one of my favorite quotes now has become the definition of luck, which I read before, but I read it again recently. And luck is all about when preparation meets opportunity, right? So the preparation was there and the opportunity was there, and then one factor after the other, things have just been in our favor. Crude oil, interest rates, Modi going abroad, the sentiment in India, the works, and those things are still, I think, going to get stronger. So the Bank Nifty now at 18,500. You have a nice, almost Marubozu type candle. Obviously, it's a pretty strong candle today, big move, and I quite think it's going to go to 19,000, 19,500, 20,000. But at this point, it just probably be a little bit cautious and wait till Rajan decides to say whatever he needs to say on Tuesday. So if you have bank stocks, you should be looking at the policy review and see if so. Okay, let me restate this. If you're a long-term investor, as in several, let's say in the next 6 months to a year, then don't even think about selling your banking stuff. As a matter of fact, if for whatever reason bank stocks do come down on Tuesday, buy more. If you have a 6-month view, or even I would say a 3-month view. But if you are anything less than that, then maybe you want to look more carefully, and you're a sort of trader, not an investor, then you want to review whether you want to continue to hold the banks or not, because the banks have actually done a one-directional rally almost from 15,000 to 18,000. So that's about 3,000 points. You're talking about a 30% rally without any correction. And in case Rajan says something that the markets don't like, 5-10% down over the week or 2 weeks is quite possible. I don't think that will happen. And even if that does, the macro factors in terms of growth in India, the inflation rates coming down, and inevitably the interest rates going to come down maybe in the next policy, there's going to be a lot of value buying or opportunistic buying that will happen at lower levels. So don't short, but if you do need to sell, then get out and maybe buy it again at lower levels. So each of you need to make your call on this. So Bank Nifty is definitely one place to look at, or the banking stocks. BSE Power, the power index. So we've been talking about this resistance line for several weeks now. Seems to be getting breached, and it's maybe it's not convincing, but the thing is, from October it's gone up there and not really come down. Lots of support below, and it's quite possible that it could cross that and go across. And if that happens, then the power index is something that will jump, or the power stocks rather. And remember, if interest rates fall, power companies have borrowed huge amounts of money, and that will definitely be positive for their bottom line. So this is one sector that could tick up on Tuesday, simply because interest rates come down, or there's some announcement to something to that effect. If not now, then maybe the next policy review. Realty is another interest rate sensitive pace, and this is the realty index. It is now, in my opinion, more or less beginning an uptrend. Okay, it's early days, and I'm saying this with a little bit of pinch of salt, but the life low is unlikely to come back. On a multi-month, multi-quarter view, you definitely have very strong double, triple bottoms here in last year, and now you have a clear higher bottom there, and a higher top is tentative, but once this starts going up, then higher tops, higher bottoms are going to start happening. And what you can see today is this whole cluster of resistances, moving averages here, that 1600 to 1700 zone is full of resistance. It's going to break out. Once it breaks out, say Monday or Tuesday, then much better levels can be expected. MACD has firmly crossed over to the positive zone on the plus zero side, and that usually means that there's some strength building up in the underlying which could take this higher, and the next target would probably be 2000 in my opinion. So we are talking about almost 20-25% up move in this sector in, let's say, 1 or 2 months, which will be fantastic. All right, so reality power definitely places to look at. Now let me just move this to my other screen, so I'll just keep writing that quickly and then I can share it with you later. Okay, the Sharia index, not really interested in it right now. The CNX IT, all right, so CNX IT has gone up and definitely showing signs of strength. So IT, let me get this down. So reality, so reality and power interest rate sensitive. IT is not interest rate sensitive, but if the Indian economy is improving, then great. I'm just checking on the forex rate, and okay, bit of a surprise. So the USD INR is 61.97, almost 62 rupees. So it's actually slipped a bit, and the market, the forex rate, at least in my opinion, has not favorably responded. So I don't know, maybe I'm missing something, but anyhow, this could maybe partially explain why the IT is going up if the rupee is actually going down. Interesting, actually, why it might be doing that. So anyhow, the markets always know better. So IT looking very bullish, making new life highs. Mid cap space also making new life highs. Nifty Junior. All right, so this is interesting. So if those of you are regular on IMR, last week the last several, or not several, 2-3 weeks, we kept saying the mid cap space is where the action was, and we found so many stocks which did tremendously well. But now it's the Nifty that's making new life highs, and it's not the Nifty Junior. So maybe the action is now coming back to the large cap stocks. This is interesting. Which actually makes sense, because a lot of the large cap stocks, some of them have huge loans, and if interest rates are coming down next week or maybe even 2-3 months after that, that's a big positive for them. CNX Energy, so very interesting that we have massive upper shadows. So there's some selling happening at higher levels on the oil and gas stocks and the energy stocks. Very, very interesting. FMCG, we look at the BSE FMCG in a little while. Infrastructure index by NSE, the CNX index, nothing much, sideways. Pharma, all right, so pharma is now lagging. And again, if you watch the IMRs of, let's say, 3 to 4 weeks back, one of the things we said is pharma is no longer having the sort of strength it was having for the last 2-3 years, and may not be the leader, and that's just playing out the way we discussed. All right, so this is the PSU bank index, and you can see that the PSU banks have really done well. And again, not to say anything about the analysis, sometimes they're just in the right place at the right time, but on this day and the analysis that we did on this week, I think it was the last week, we said PSU banks is perhaps where you need to be given the sort of strong up moves that we were happening. And as you will see today, some of the biggest moves in the banking side were on the PSU banks and not so much on the private sector banks. The PSU bank index has gone up, and I suspect that you will probably continue to get action on the PSU side. So this is very important. So of course this is not this index is only from 2011, but still it has basically cleared all these resistances very clearly, and the PSU banks can, I think, easily be expected to go to around that 4,500 mark. It is at 4,270, another 220 points. We're talking about another 5% up move in the PSU banks that could easily happen, maybe even on Monday, and definitely on Tuesday, if, depending on the announcement. All right. Okay, this is the India VIX. It's nothing. It's not a price index. It's a volatility index, and as you can see, the volatilities are pretty low. Markets are pretty complacent, and people are pretty happy about whatever is going on. There seems to be no anxiety at all. but that's not necessarily always a good sign. Okay, so this is the auto index now, and that's also made a new life high. So index after index making new life highs, all sectors firing away. Consumer durables, so lagging for sure for the last 3 months. Haven't really been able to go up. You saw in almost all the other indices nice uptrends. In this one you're just seeing a sideways move. It's range bound, and I think you look at consumer durables only once one side of these range breaks out or breaks down. Capital goods, okay, inching up but not there. Nice article posted by I think Sridhar on BIC Yahoo Groups about how Indian corporate CEOs are now feeling that really nothing much has changed on the ground, and the Modi hype is now over, or they are like wondering, but they're willing to give another 6 months to the man, probably deserved. And if real change or real rules and real liberalization or opening up does not happen, there's been a lot of talk, then people are going to start reviewing their view. But Modi is smart, he's outsmarted everyone, and he's definitely got things up his sleeve in my opinion, and just at the right time when people are starting to perhaps question his abilities or authority or his intentions or his execution capacity, he'll pull something out of the hat and boom, you'll see the hype back and you'll see some action, and probably big time action, right? So capital goods not moved, but I think they will. FMCG also, as we said a couple of weeks back, not really doing too well compared to the other places. The FMCG and pharma. So that what we saw earlier was the CNX Pharma. This is the BSE Healthcare Index, which has more than pharma. It has got hospitals, etc. and all. Again, 3 weeks sideways, not really in a great shape. But nevertheless, no question of selling it or shorting it. Definitely has the potential to rise. Okay. Metal index. So this is under pressure, but it is my belief at this point that it's very, very unlikely that the metal index is going to go below 10,700 until and unless something complete surprise happens. So this would be the longer term trend line to sort of watch, and once that breaks out, then you would probably get the next up move. So very, very strong support at lower levels, and an up move I think in the making, unless some major bad news comes out. And as and when it crosses that downtrend and crosses 12,000, that's probably the time to quickly jump into metal stocks. Cap, oil and gas, yep, PSC, PSUs. So PSU has gone up, but I suspect that the PSU index, BSE, which is from all sectors of the economy, this went up basically because PSU banks went up, which are a pretty decent weight inside the PSU index. Okay, so that's it in terms of sectors. Every sector is looking good, and this is the Nifty, the Sensex, the ultra long-term 35-year Sensex chart. And well, that's just behaving the way it should. I mean, just going up and up and up, right? Okay. Okay. That's it. So pharma and FMCG, laggards, realty, power, and banks. IT will be almost at 62. Okay, right. So today we'll look at the Nifty stocks, and I think nice timing because last 3 weeks we've looked at Nifty Junior, and that's where the action was. But as we saw earlier today already, a lot of the action seems to have moved from the mid cap back to the large cap in anticipation. So what I'm going to do today is run through all the Nifty stocks quickly, because quickly meaning a little faster than usual. And the reason is this, that I propose to do another IMR as part of the trading day for Tuesday on Monday evening, so that we have Monday's data also, in which we will review the interest rate stocks more in detail. So on Thursday, on Monday, I don't want to do cements and autos and all that too much. I probably prefer to do. Oh yeah, I forgot to add that. Autos, cap goods. Okay. All right. So this is to get an overall view of the market today, and then on Monday is a more focused session on looking for perhaps short-term trades to be executed on Tuesday, maybe intraday trades, maybe 1 week trades or whatever, depends, right? So we'll review that. Okay, so that's we'll review that on Monday, and then full day on Tuesday live. Okay, so ACC has been sideways right from May, June this year. Okay, and has done this big candle today. I would say one word of caution for cement stocks, especially ACC and Ambuja, is that the Holcim Lafarge merger that has happened globally is impacted Indian corporate structures for ACC and Gujarat Ambuja, and I think there's a review that's happening by the Competition Commission or something. So there's an event risk there, and this uptick here, I think it should not be taken too seriously. There is nothing in the volumes. It just probably the rest of the market going up, therefore this one is also going up. So 1420 definitely good support, but I'm sure we're going to find much better stocks, and this one is going to head to 1500, 1540, at which price you would review, because we do not know at this point whether it's going to break out of this 1550 resistance. Ambuja Cement, more or less the same picture. Slightly better picture in my opinion than technically than ACC, almost a sister company now. And once it crosses 238, 240, definitely on its way up. So between the two, then I guess Ambuja it is. Very, very good support, as you can see, at around 205, 210. But if you're a trader, you can put a stop loss below 217. Let's finish Ultratech in the same time. So the cement company, that's done. So this one is not showing strength at all. Seems to have just been sort of suppressed. It's so the promoter of Ultratech, which is what's his name, Vikram Aditya Birla. They are bidding for some of the Lafarge Holcim global assets, and I'm not sure if how Ultratech Cement is involved, but Ultratech is owned by the Aditya Birla Group. So this is something that could have an impact on this. So it's an ongoing thing, right? So at this point, just stay away from cement stocks. 2350 is support for Ultratech, and then 28. But all the cement stocks have gone sideways. Let them make a trending move, and then we will review. So coming back now to Asian Paints. So Asian Paints, wow, big move, and that's a new life high, massive life high. Okay, very impressive. And on very good volumes. So something is perhaps cooking, maybe some news. This is definitely something one should look at buying. Excellent support now at around 700 levels. All right, and it's broken out of that very convincingly high volumes. In case it comes back, even if it comes to 720, 710, consider buying more. And I would say the next stop for this is around 1,000 rupees, and let that happen over even a month. It'll be fine. And yeah, that's where Asian Paints is. Mm, just keep forgetting to do this, sorry. All right, so Axis Bank headed to 500 rupees in my opinion, right? And once it crosses that, then definitely on to higher levels and very good support at around 465, 470. If you look at volumes, yeah, so nothing particularly on the volumes. This is looks like more a wait and watch type market, which is not a surprise at all. So it's been going sideways for the last 2 weeks, and you can expect, I think, most of the banking stocks which show a similar picture to stay sideways till Tuesday 12 noon. So definitely one of the leading banks to buy on the private sector side, and keep it on your watch list. Next, Bajaj Auto. So inching up, I would say if it comes down to around 262550, definitely buy it. Once it breaks above 27, it is going to go to 3000 rupees. Right? Again, not in the short term, but very strong uptrend and has a good potential of going much higher. Yeah. So while we are doing this, let's look at Hero. What happened? Hmm? Why did this come? Okay. Hero Motors. So Hero Motors slightly better off pattern wise, uh, sitting above 3000 comfortably now, and a stock that should be accumulated. uh, 3250, 3500 definitely coming. Something happened on 7th of this month, 7th November. Huge volumes, so not really able to appreciate the volumes. Otherwise, volumes today are below average, but every other indicator is looking healthy. Nice consolidations happening, as you can see, and it just keeps going up with forming this sort of cups and bowls and all. Definitely a good buy, and is headed for higher levels. Then looking at other auto is Maruti. Inching up, but some hesitation at around 3-4, and today's volume nothing great. You could probably afford to wait on this, I think, right now. uh, Indicators are showing some amount of weakness. The MACD is quite healthy. May come down to 3100, 3150, at which point probably a good time to buy. Alternatively, as soon as it breaks above 3400, you should buy it, and put a stop loss below 3.2, not even 3.2, I would say around below 3.1. Actually, if you know derivatives and futures and options, it's much easier to put your stop losses with the options in situations like this, simply because the what do you say, um, the support levels are in a huge range, all the way from 3.3 to all the way to 2.5. You put any stop loss, it could just turn down. The stop loss gets taken out and then it turns up. But if you did this with say an option strategy, then you can ride out that volatility or that move, or that down move, and still live to see profit after that. Okay, so that's Maruti. M&M. Definitely looking better than Maruti, though Maruti is at a life high. And I really like consolidations like this. Nice base formation, triple bottom. It's moving out of that with nice volumes, and the volumes are increasing. Once it crossed 1250, that was an excellent time to buy, but even now, you should buy it at maybe 1300 if you can, but whatever price on Monday morning. And it is very likely to go to 1400 and go back to this life high at around 1410, 1420. I think again 1 or 2 IMRs back, we were quite strong on M&M with this pattern, and we said go buy. So I hope you know that I'm actually uploading the old IMRs on YouTube one by one. they're going to be private videos for some time. So in case you need to watch the old ones, let me know. I'll need to send you a private link so that you can watch it, and then it'll be time delayed for the others. And since you're all um, active subscribers, you can get the link right away. For others, we'll make it public after a couple of weeks. Okay, so M&M definitely a buy. Stop loss should only be below this level. Could come back here, take support, and go up. All right. Then what did I miss? Tata Motors. So Tata Motors just trying to break out. I've actually lately started to see a lot of Zest vehicles. One of the new launches. It's become quite successful. Like I think I said on the previous IMR, the Zest outsold the Honda Amaze, and that's quite an achievement. And there are more vehicles that Tata plans to roll out, doing well. Just at that 550, very, very good support on this uptrend line. The 50-day moving average is also there. So you have a pretty reliable support there, up again up today on good volumes. And it's definitely going to go past 550 and then at higher levels. If you need a stop loss, then I would say only below 500. I know that's a little steep, but then that's the nature of the markets nowadays. So maybe around 495, 494. Otherwise, hold to a target of 600. Okay. So I think we are done with all the auto. Bank of Baroda. So there, life high, new one. Nothing more to be said. We kept talking about 1,000 rupees, 1,000 rupees, 1,000 rupees. It got used to that. It's gone up, shot up. Very strong candle, that is. Very strong volume, that is. No way you should expect it to be coming down unless something really dramatic happens on Tuesday. So please go buy Bank of Baroda. Should be strongly on your list. And just hold. You need a stop loss. You can put one at around 983. Alternatively, if you really need to protect your investment and you're a little worried, go buy 1000 put or even 1050 put for December. What else? Liquidity will be bad, and you can go along on the futures and just write this with your downside protection. And you can actually execute this on Monday morning. And if something terribly goes wrong on Tuesday, you don't have to put a stop loss, and the put will take care of it. Take care of the risk. Okay, so Bank of Baroda, I would say next stop is 1200, 1250. So you're talking about 8-10% moves step by step. Bharti Airtel, forget it. Lots of pressures on the IT side. Reliance Jio could launch at any time. So let's not even spend time on this. BHEL, up, up and away. Today a slight pause. And yesterday went up on wonderful volumes. If it does come down not below 270, 275 in my opinion, today was just a sort of temporary halt, and its next target is 310, 300 to 315. And if it does come down, then not below 270 in my opinion at this point, right? May probably be a good time to buy and then just ride it all the way to 300 to 315. BPCL, so this was one of the stars at open, really went up, and this is like almost a gravestone doji, huge volumes, went up but had selling pressure as it came to the life high there. But this is really interesting, massive volumes there. Some set of people who are obviously strongly selling at those higher prices. Makes you wonder who they are. I don't have a clue, and therefore for now I would just say a little bit of caution is advised. Watch BPCL over the next 1 or 2 weeks, or at least the next week, and then take a call. If this upside selling continues, then BPCL may form a double top, at least for now, and go sideways, and at the very least, or who knows, maybe even get back to 650, at which point I think again it will become a good buy, and we just have to wait. So it should be on your watch list. Don't do anything with BPCL at this point. Kane, so In the beginning of the session, or like a few 10-15 minutes back, we did say that don't short anything. But if you look at the previous IMR, last week's IMR, this was one of the stocks we said actually short, short, short. And the reason we said that was because Kane sells its output. It's basically produces crude oil from fields in Rajasthan, and if that and they sell it at the international benchmark price. With that coming down, Kane's profitability, revenues, everything comes down. And I had mentioned that in case there's a bounce, that would be a good place to short. That's exactly what happened this week. Plus, there's another opportunity that's probably going to crop up on Monday, which is this. And simply that's like a tweezers, triple tweezers bottom. And if that breaks, excellent short all the way down to 250. Actually, even today it opened with a huge gap down, if you notice there. So that line has been filled with all the short-term moving averages I have on my chart. Just ignore that for now. And therefore, stop loss at around 260, 263, and a quick drop to 250 is entirely possible in the coming week. So if there is a short, Kane is the short, right? Cipla Healthcare, little bit of not the uptrend moves have become a lot less regular, and by this is some line that is neckline that we will have to keep in mind in the days and weeks ahead. This could be a head and shoulder top in the forming, and it could turn any which way. And you can see the MACD, you can see everything, sort of trending down. The steam is going out of these stock for sure. Therefore, if you're holding pharma or Cipla in particular now, might want to be prepared to sell out of what your long holdings are at a higher level. I wouldn't say sell now, but let it go there to 665 and then we review. Otherwise, if it does break below 600, you should definitely get out of Cipla. Coal India, okay. So coal scam thing sort of in the past, but the coal auction is not over. Remember that. But now this is now testing the downtrend line. We'll have to see how this plays out. Nothing in the volumes. MACD 0, RSI 50, very short-term stochastic high, but it's just 5 days, so won't read too much into it. Best time to buy Coal India is only once it can clear 370. Put an alert and be patient till then. DLF. So amazing recovery after this big fall, and there's a gap here which has now been closed. DLF is the heavyweight, the big brother in the reality stocks. So if this breaks out, which it probably will, I think, then once it crosses 170, then 180 is the next stop. I don't know if you saw Khemka, the guy who blew the whistle on DLF Haryana deal or something. He's now got a plum posting after the new government came to power in Rajasthan. He's now, I think, the commissioner for transportation. He was earlier in the archives department. Okay, so DLF looking good technically. Very good support at 140, sorry, and you can put a stop loss at 136, 135. Resistance is on top, but I think they will clear. And definitely if interest rates go down, DLF is going to breathe a sigh of relief on two accounts. One is it's got huge debt. Second, corporate debt. And second, if interest rates come down and housing demand could go up, that will be good for DLF. Okay, next. Dr. Reddy's, so that's making a new life high, so not showing the sort of weakness we saw in Cipla. Okay, and this is definitely showing strength, no doubt about that. Should not be sold, should be bought as a matter of fact. So buy, you could. Stop loss below 3425 in my opinion. Till then, no selling. Having said that, remember that sometimes sector weakness starts with one main stock and then it just feeds into the other stocks. So as a sector, you may want to avoid pharma for some time. GAIL, Gas Authority of India Limited. Okay, this is really not going anywhere. There's obviously some trouble that happened here. I'm not sure what it was. Um, so you can use this as a good example of how in a very bullish market like we have right now, even when stocks get beaten down for whatever some news or policy or whatever, they don't go down too much. So from 540 got beaten down one day to 500. That's 10%. It came down to 470 and then just refused. Beautiful, beautiful support resistance line here. So precise, so to the point. And then once it's above 500, uh, Gale probably try and go back to 530. Some resistance there right now, and I would say a good stop loss is below 466. Okay, gold. I've said stay away from gold for a long time now, and I just continue to reiterate that. And if you're planning to buy gold, well, wait. The prices are likely to go lower, and you can therefore buy more for the same uh, price. Okay. Grasim, 3.5, really good support. Downtrend sort of neckline of inverted head and shoulder, which means usually consolidation, and very interesting. So if you look at the volume side, uh, this goes up on good volume, this downside relatively low volume, now again building volume. So it's all fitting textbook like picture. Those who are aggressive traders, investors who don't like to wait for confirmatory signals should enter now with the stop loss below 3386, and once it is above 3663, jump into it, and it could go all the way to 393950. Grassing would definitely be one of the things to look at technically speaking, right? I think the other one I said is Bank of Baroda, which I was very bullish about. Grasim. Uh, Anything else? Which other stock was I forgot to make my notes this time. Uh, if you remember, please post. Okay. Then HCL Tech, IT was doing well as an index, but uh, thank you. So what was that? M&M. I think Tata Motors also. Right. All right. So HCL Tech, good support at around that 1600, 1550, 1600 levels, but I would say just technically speaking, stay away from it. Otherwise, it's fine. No problems buying it. Very, very strong support all the way till 1576, and the stop loss would be only below 1553. Thing is, it has to break 1750 to make the next up move, which would take it to easily 2000 rupees in my opinion. Right? Okay. So HCL Tech, HDFC, new Li-Fi today, but some selling at higher levels, so that's a matter of slight concern. At least as far as the banks are concerned, I think that concern is mostly about what will RBI say on Tuesday. Until then, you just have to like sort of wait. Nothing else to do. Okay. All right. HDFC Bank making new Li-Fis, definitely a buy. Has been, as you can see from the trend line right from early October. Very good strength. MACD really nice and smooth and trending. The MACD itself. Definitely put HDFC Bank here. Let me just make a list of all the banks. Yeah. So we already said Axis, DFC Bank, EOB. Hero Motors we finished. Hindalco metal, so I said metal index is very good support, but this has obviously been doing its own thing, and Hindalco is looking really good. Should have been bought at 150, 160, but definitely should even buy now. Be patient till it breaks 185, then 200 is very likely to come. It could drop back to 165, 160 if the market corrects, but I do not expect it to at this point go up below 150 at all. So really good stop loss at say 167 for traders, and for in longer term folks, you should probably keep it around 50, 158, 157. Okay, and once it clears 185, like I said, then definitely 200, and after that much higher levels back to its life high at around 250 is entirely possible. Hindustan Unilever, FMCG, bit of a laggard in the index side, but as a stock, well, it just broke out of a triple top. That is definitely a major achievement. Even though volumes, however, are a little lackluster, but they could catch up. Remember, it was expiry week, and going forward, this could just go up. Very good support now at 753, 747. Next stop, once it clears 800, I would say just hold on till it goes to 1000 on 995, 950. ICICI Bank broke out of its 2008 peak after 6 years, and it should just therefore be held for much higher levels. ICICI Bank, I would put, is almost on the top of my list of banks in a sort of league of its own, because it's I believe it's now going to play catch up, given that most of the other private sector banks have made many multiple life highs in the last 1 to 3 years, but this one is 6 years and now it's broken the 2008 peak, right? So that's something to keep in mind. So please don't sell ICICI Bank under any circumstances, and keep accumulating it as much as you can. If you need to really have a stop loss, then it is only below 1660, and I really think even if you get out, you're going to regret selling it, right? So that just give me a minute, need to get some water. ICICI Bank, so like I was saying, make sure you keep buying this uh, much higher levels to go, and if you need a stop loss, keep it around below 1660, and I really think if you do get out of it, you're going to regret getting out in a few quarters or 1 year down the line. Okay, all right. IDFC, so this is now breaking out of that resistance, as you can see, trying to at least, and my take on IDFC has been very clear and simple right from the time it was announced that they are one of the banking license winners, which is to just accumulate IDFC stock as much as you can, because you're going to get IDFC and the new IDFC bank stock when the demerger happens next year, which is it's actually 1 year from now. Yeah, so just keep buying this, but technically now that if it breaks above I would say 168, good time to get in, and it could quickly zoom to I think this time it'll just go past 175 without a blink and then go to 200, and a stop loss would be below 148. So that is IDFC. IndusInd Bank, right, this is another one. I think this is a stock that's going to 1000 rupees, and you should not at all mess with that. Move and just keep buying it. Definitely one of the stock wise very good banks, very good profits, very good returns, moves. Stop loss only below 689, 675, and just keep buying it till it goes to 950, 975. I'm going to put that here. Infi, so that's been going up, and this buy, I think this stock is just headed to 5,000 now. That's the trend line to watch. Good support at around 4,100, but I really don't think it's going to break down at all. Not going up with the same level of conviction of say the banks are, but nevertheless looking good. And I definitely am not seeing anything on the forex side in terms of rupee appreciation right now, but do keep that in mind that if, like we discussed in the first part of the session today, if the rupee gets stronger, then these are stocks that are going to really get beating, and that's something that you should keep a track of, which is the rupee versus dollar rate. Okay. ITC, stay away from it. It's going sideways, as you can see. No call, no comment. No, don't sell it, don't short it, neither do you should you buy it. Jindal Steel, so this has really been getting beaten down, and it is potential that it has the potential of going down to 107. It's at 140 now, so if you're shorting, then this is something to just keep in mind. But having said that, this is the level, the low of that hammer to keep an eye for. It could just bounce off from that. Like I said, not a good market to be short in, so just keep it, observe, but don't trade this short. JP Associates, interesting, empty red candle. Those of you who know candlesticks or have come for DIC classes will know what it means. That means potential sign of strength happening even though it is weak. Sometimes the strength will show up like this. So I would say again, stay away. Best to stay on the side of strength, where so you found all these stocks in the autos and banks, as we already mentioned, and Grasim. And you really don't need to look at underdogs at this point, right? So we leave it. Kotak Bank, so we all know about the Kotak ING merger. However, it has not yet been approved, and RBI needs to, I think, give the final clearance, and then there is the whole thing about when the actual date is for the merger financially, corp shares wise and all. So may go to 1250, may drop below 1150. That should be a stop loss. And right now, a lot of euphoria, interest in the stock. Fundamentally, I think the most expensive bank in India, fundamentally speaking, from a valuations perspective. So it's just riding on growth and reputation and good management, all that stuff, but expensive. So maybe, just maybe, the other banks are perhaps a safer bet. But you want to buy Kotak Bank? Yes, you can. And if it crosses 1150, then 1300, 1400, 1500 is definitely on the cards. L&T, capital goods, the major component of the capital goods index. Definitely a nice consolidation, double bottom type thing over August, October. And again, 1500 was its old life high of 2008. It has broken out of that. That's the level. And it has made a new life high. This is one stock along with, which was the other one I mentioned? ICICI Bank, which I think should definitely not be sold, and you should now accumulate it as much as possible. So it's not, I know, or okay, in case people see these notes later, they shouldn't get confused. LT, right? How long? As a trader, yes, you could put a stop loss at below 1605, preferably below 1563, but once it goes to 1750 and breaks out of that, then at least hold it till 2000. Lupin, Dr. Reddy showed strength, Cipla showed weakness. Lupin, okay, also showing some strength but no volumes, and MACD negative crossover. Interesting. The RSI is really not able to cross past the 70 mark. These are sometimes signs of trend getting tired. So I would just say, because we saw weakness on the pharma index itself, to be a little cautious. Don't initiate any fresh longs, and maybe you want to sell out if it goes below 1400 on Lupin. M&M we did, Maruti we did, McDowell, sorry, is not there, NMDC. So it broke this level. I said last week to keep watching it. I think 145 broken down, and it just in one day from 145 it went to 139, 140. So if one was doing this as a a trade with SLTP orders or an alert or something, definitely money to be made. Now 140 becomes a really 145 sorry becomes a very good resistance. If it does bounce up, should short it with the stop loss above 147, and actually once it breaks below 139, I don't think it'll actually bounce back to 145. Then well, where could this go to? 135 for sure, and really good support only at around 130 132 levels, right? So you could potentially look out for that if you're looking for a short. NTPC, so again ignore NTPC, stuck between 135 and 150 till it breaks out of one of these two. Don't do anything. ONGC coming up. So remember, ONGC's revenues are linked to the international crude oil price. It's basically a crude oil raw producer, so should not be confused with HPCL, BPCL, etc. and all. It is just sitting critically on the 200-day moving average. So you know what, if crude oil goes down, ONGC could be a very good shot. As you can see in the last 3 sessions, large upper shadows, that means a lot of selling that's happening. Excellent stop loss for a short at around 389, 392 will be very tough to break. I think it'll break below 375. You can put a nice stop loss around 384, write it down at least till 365, 361 is what I would think. And once that breaks, then who knows, it could fall all the way to 320. So shorts, ONGC and Kane. Punjab National Bank, zoom, tested our patience for months literally when it could not break out of 1000. Last week we said if it breaks out of 1000, just buy it, and today just did that and bang, gone. Had you been watching the stocks every day, you would have gotten a clear indication yesterday itself. The volumes itself yesterday were higher. Nice big Marubozu candle from 950 to 1000, and today is from 1000 to 1072. Now that is massive. It's a 7% move today on good volumes. Could cool off, but don't bet on it. In case it does cool off, remember that it's a very clear breakout. In case it comes as close to 1000 or 1050, please buy PNB. It should be strongly on your list. And the next stop, I think, is 1300, 1400 for this. Of course, there'll be resistances at 1200, 1250. But I think 1400 is definitely on the way within the next 3 to 6 months. You're talking about 40% return, almost 30, 35%. Not a small amount. Definitely should be looking at it. So along with BOB, PNB. It's going to be spoiled for choice in banks actually. Actually, if you remember again on the IMR, we've been saying just buy only banks for the last 1 month or something. Right? Okay. Bobby's asking holding period for what, Bobby? Which one? Which stock? I missed your chat. Oh, you got the info. Thanks. Okay. For PNB, yeah, 3 months, 6 months maybe. All right. So power grade. Really, why do you need to bother to look at stocks like this when you have all these others? But still, this is looking bullish, no doubt. 135, excellent support. Once it goes to 145, 150, it will most likely break out, and then much higher levels all the way back to its life high, most probably at 165, right? So that's about 10% to 15% up from current prices. Ranbaxy not longer there, I think. Reliance. So Reliance just been dragging and testing everybody's patience. So it's been a very, very big underperformer to the markets, and even today, big sell-off at higher levels. Wonder what happened. So good volumes, big sell-off. So clearly there's selling pressure at higher levels, and I would just say, though I think this will probably go up maybe in due course of time, and there's really good support at around the 960, 965 levels. I think it's a matter of, it's not necessary to put your money in this when other stocks are really, really doing well. The time to put money in Reliance will really be when this level of 1,150 gets broken out. That's another 15% up. Then only I think you buy Reliance. So there's plenty of resistance at that level, very, very strong resistance. As a matter of fact, for those of you who know about options, I would say this: go and sell the 1,100 or 1150 call option for Reliance for December. Probably make a, not a great deal of money, but a decent sum of money at pretty low risk at this point. Reliance Infra, I think it's not there, so we move on. S&P, why is this here? State Bank of India. Alright, what happened? Where did all the studies go? Something is wrong. All my studies have vanished from SBI. Oh, yes, I forgot. Oh, yeah, sorry. My apologies. This thing did a split, right? And for some reason it's not split on my... Okay, fine. Got it. No, it has split. So I'll tell you what happened. All those old... So this is by the... For those of you who use Metastock, right? All those old studies are there. All those old studies. So the stock split, but Metastock will not move these lines down. So you've got to basically start all over again. It's just one of those things. So just indulge me. Just remove all this. Okay. Okay. So thank you. This is the life high, and so it's on its way to coming back to the life high that it has at around what's the price? Why did it disappear? 350, right? And today volumes definitely good compared to almost the last 2 weeks. And SBI should definitely be bought. Safe stock, ultimately very tough to go wrong with SBI. Stop loss, really good one, is below 294, even better one below 286. If you need a really tight one, below 302. Those who have the both the knowledge, the courage, and the money, and the ability to take the mark to market should really look at some of these banking stocks in the FNO side and leverage your returns. Right? Maybe you want to do that on Tuesday only after results or other RBI policy, but still, right? So yeah, 350 is definitely on the cards in due course of time. Remember, that's a double top from 2010, and once that goes, then SBI maybe back to making new life highs in 400 rupees. SSLT, sorry, I should remove all this. So SSLT comes to that threshold, and if it breaks down, which it is quite likely to, good volumes today, or rather increasing volumes, should short it if it is below 232. It is at 231. You could short it on Monday with a stop loss of 236 and all the target at 220. Let's put that here. Sun Pharma. So, well, here's the other major pharma stock which is showing clear weakness along with Cipla. So just, one by one, you should just get out of pharma now. They have the potential to go up again. There is no doubt about that, but I don't think it's worth the risk given that you have some really good opportunities in the other sectors now, right? So Sun Pharma and all the other pharma things, even Dr. Reddy's, which I said you could buy, you should just actually wait and look for opportunities to sell at higher levels rather than buy, in my opinion. Tata Motors we finished. Tata Power. Right, so Tata Power at the verge of a breakout, in my opinion. Two things that are important for Tata Power, or for that matter any power stock, is one is the coal supply, and that is something which is in the works. It could take another 2-3 months. Remember, the government has promised an auction of coal mines, plus the interest rates. They all borrow big money, so huge interest rate outgo. So even small changes in interest rate payments make a big difference to their bottom line and sometimes to their EPS therefore. So if RBI is benign, soft, decrease the rates, then Tata Power is looking at $100 in perhaps 2 weeks, and one could definitely buy it in the spot market demat account. Put a stop loss at around 91, 91.50, but a really good one is only below 89. But once it crosses 94, 94.50 on volumes, you should definitely be buying it, and all the way to 100 quickly, and then after that 105 rupees, 110 rupees also perhaps. That's in percentage terms a very good return. Tata Steel, again sitting precisely almost at that multi-year downtrend line. Today's big candle, Marubozu, probably because of the sentiment in the market, nothing to do specifically with Tata Steel. So the support is critical. 420, 425 is even more critical. Could fall down, or rather break down. Sorry for the falling down thing. So if 447, 446 should be your stop loss for the long, but it could come to 430 and bounce up again. If it does that, you should buy. A lot of moving averages here which are a resistance, but if you want to play safe, then wait for it to break out of 500, put a buy order at around 505, and then get into Tata Steel, because if it can do that, it will probably go back to 550 quite nicely, and from your entry price that will almost be a 10% move. On the other hand, you want to take the risk now on Monday. Anytime anything around 470, it's 473 now, or even at 473, buy it, put a stop loss below 449, and well, after that just hold on and watch, because it could go up. Nothing, it's I would say 60-40 chance in its favor, so nothing great in terms of probability for that. Remember, Doe theory says the people who wait usually benefit. So TCS, again buy, but again red candles, tall upper shadows, so puts a question mark on perhaps what we want to do. You can put a still buy 2750, 2775 would be your top, and then we would review what to do with this. Tech Mahindra, same situation. I would say wait and watch. 2550 stop loss, buy only if it crosses 2750. Till then wait. Ultratech we finished. Wipro again, okay, but I like to see this sort of MACD turnings, base formation, crossovers, and also I would say Wipro has definitely some strength, but you can see mostly been sideways since February, so almost the whole of this year, 10 months, 11 months now, And again, would be better if it goes above 600 then you buy. No need to hurry about it. But if you have to have an IT stock, this could definitely be one. Nice bowl type formation attempts, but the shadows are a sign that the bears are still very much there. ACC. Okay, so one thing which is not there I should include is one second. I think Z Limited is there in Nifty and somehow this doesn't get included here. Why is it like this? One second. Okay, one second. So Z, nice uptrend all the way from mid-September. From 280 it's gone to 390. Taking a pause now, and oh, something happened here, so really tough to look at the volume picture and do any interpretation of that. Could stall here for some time. 400 rupees psychological mark, MACD showing some weakness. I'd say wait and watch and buy Z only if it goes above 400. Otherwise you may actually want to get out of it if it falls below 366. So that should probably be a stop loss, say 364, 363. If you're holding Z, don't get into any fresh positions at this point. Alright, so great. So we've come to the end of the IMR today, and just to review, based on only the Nifty review that we did, these are the stocks that we should really be looking at buying: ICICI Bank, IndusInd, L&T, and then if you still have money after that, so then you can look at Axis, HDFC Bank, Bank of Baroda, and PNB. Between PNB and BOB, might have a tough choice. PNB is not at a life high, BOB is at a life high. So if you want to buy strength, buy POB. If you prefer to sort of buy the underdog, buy PNB. Grasim, M&M, Tata Motors all looking good, but I really wonder with all these really nicely set up. The risk, of course, in being so heavy in one sector is that if something sector specific happens, which could happen on Tuesday. So best would be perhaps, as far as the banks and maybe all this set is concerned, just wait till Tuesday and then take a review. Right, so that's it. That's the end of today. So just remember, a reminder. Monday evening we are doing a detailed review of the banking space and the capital goods space, capital interest rate sensitive space. So I will do maybe realty, first banks, and if you can finish banks, and I'll do banks from everywhere. And so banks, NBFCs, and housing finance companies, these are the three things that will really probably get impacted on policy day. So we'll do a detailed review of all those stocks, some fundamentals, mostly technicals, and the general review. The newspapers would have some, the business papers at least would have some interviews, etc. So in case you want to be on the top of things, grab a paper, Business Standard, Economic Times, Business Line, whatever, or at least visit their websites, catch up on Monday, and then we can take it from there, right? Okay, so Bobby has sent us a link on money control about the government's plan to reduce its stake in the public sector banks. So let it just come up. Thank you, Bobby. So the government stake holds ranges from 56 to 84%, and the title heading says make it coming down to 52%. That's a lot. So great. So I think all of you would have received the link on the chat box. Have a look at it. Do a detailed read. So the thing is, a lot of these banks need a lot of new capital. It's a $60 billion over the next few years. So we'll review stuff like this, and I'm sure there'll be a lot more. So Bobby, everybody else, and those who look at the recording later in the weekend, in case you find any news that you want to share, events that you want to share, why don't you just send it into the email to me. I'll review it over the weekend on Monday, and we'll do a really in-depth thing on Monday evening, 7:30 to 10. It's priced separately. Please have a look at the post that I've put out on BIC for details, and then we will follow up with a full day live trading session at BIC starting at 8 a.m. going on all the way till the markets close, at least till 3:30, and then people want to stay back, ask some questions, then 4 o'clock, 4:30. Right, so that is what we're going to do on Monday and Tuesday. So if you're going to join us, you're most welcome. I look forward to having you. Take new positions, I would say, only after policy on Tuesday. We know what to buy, what not to buy, and stay well, make money, and happy December. Last month of the year is here. The year has flown by, and we're looking forward to the new year ahead. Great. Thank you and good night. The recording will be available by tomorrow afternoon, hopefully. So look for it in your inbox, in your Gmail account, just like on YouTube, like I've sent it in the last 2-3 weeks, right? All right. Signing off. Good night.